Businesses are set up primarily to organize an enterprise, and also, when it's a small business, to protect the individual from personal liability. You will have separate insurance for your business and all of your business assets. You will have separate bank accounts for your business from your own bank account, and you'll have separate contracts for your business. When you sign a contract, you sign your name. When you sign a contract as a representative or officer of the business, who is duly authorized, hopefully, and we'll cover that in our form, we cover that in another video, you will be signing the business name, by, and then your name, comma, the title. This way, everyone knows that you are signing as a representative of the company and not in your own capacity, not for yourself. Now, if there's a guarantee related to that, such as for a loan or a guarantee on a lease, then you would be signing it in your own name. And what that signifies is you are now personally responsible as well under the guarantee, as well as being responsible as the representative for the company. But to bring the company into a contract situation, the first name is the name of the company, the second name is your name, the third name is your title. Okay, so make sure that you follow those rules. The same thing applies when you're paying money out of the account. You should have a separate bank account set up, at least one, for the business. Depending upon what type of business it is, you may be required to have more than one account, but you definitely want to have at least one account. Now, as we discussed in the other video about setting up a business, you will have your FEIN number, which is your Federal Employer Identification Number, that is like a Social Security number for a business. It starts out with 2 numbers, then a dash, and then 6 numbers. Similar to your Social Security number, which has 3 sets of numbers separated by 2 dashes, but that's how you'll know the difference. Your FEIN number has 2 numbers to start with. That's the number that you use for your taxes. That's the number that you use for bank accounts, etc. That's where all of your official IRS and related reporting, and also for the state, sales tax, income tax, etc., will be under that number. So now you've got your bank account set up. Depending upon how your business is set up and what types of banking you'll have, whether you have an account for a credit card, whether you have just a regular operating account, or you may have, in the old days, people would have a petty cash account or petty cash fund. It might be in a tackle box or something in the office, and it would have, just odds and ends, actual cash money. And if an incidental expense was needed to be bought for the business, somebody would need to buy stamps. And I'm guessing here because I'm not that old. They would go to the petty cash and use that to go make a purchase, bring back the receipt. The bookkeeper would then log that and then build the petty cash back up to whatever their little cash amount was. Sometimes you'll do that with an actual bank account. Check with your bank about minimum balances and things so that you don't have your fees go out of sight. But you would have a checking account with a certain amount of money in there for incidentals. And you may at that point have a trusted employee who can sign on those accounts. Now this is where we want to observe, again, the corporate formalities. You might only have $5,000, that is the most that's ever in that account. So that would be the most that could ever be stolen from you through embezzlement or improper handling of the funds. But that's not acceptable. You really have a duty, and your bank and the bank rules require that you as the business owner cannot delegate the reconciliation process. So when those bank statements come in, you as the business owner need to eyeball those statements. Now, it might just be online, but you don't want to be giving away those passwords because you want to verify that you are looking at those statements within a couple of weeks of when they're coming in, so that within 30 days or any other applicable time frame, you can notify the bank of anything that doesn't look right. You're checking for the signatures on the copies of the checks. Who signed those? Does that look like the bookkeeper's signature? Does that look like somebody signed it for him or her? Is that your signature or is it a copy? And those are the primary ways. The next thing you want to check for is who are the payees on the check. Who is the check paid to? It should not be paid to Visa if this is not an account that you're going to be paying a company Visa bill to. Some of the biggest embezzlements that have occurred are where people get really cocky. First, they start writing checks to their incidental expenses, and then they may get really brave or brazen and start just directly paying their bills out of a company account. I worked on a case years ago, and it was where the company was suing the bank, saying that the bank should have looked out for them. The law is the business owner is responsible. Yes, banks have their own internal checks for certain amounts, and by meaning check, I mean a threshold, that if your activity is a certain level and you've got smaller amounts, maybe you've got a rent payment or some big things once in a while, or tax payments, but other than that, your expenses fit within a particular range. If all of a sudden there's a big check that comes through, it may catch their eye. But they are not responsible to call you. You are responsible to get those accounts, get those documents from your account or online, and contact them. If there's fraud involved, then you'll have a fraud affidavit, and then there are other remedies to take care of on that. But that's why it's important that if you are going to delegate check signing authority, you cannot delegate this important function. So be really careful. So then, once you have your account set up, to remind you, or to have the checks printed over the signature line with the company name, to just remind you that nobody should be signing without corporate authority. And then corporate authority for someone who's not authorized by the operating agreement or the bylaws to sign checks, you would have a separate resolution in your corporate minutes to show that Betty Jane is authorized as the bookkeeper to sign on the ABC expense account, and put the starting date and the ending date so that you have that in your records. And if you are Betty Jane, you want to make sure that's done, because you want to know that the company has identified and provided you with that authority. You will be on the signature account for that, the signature card for that account at the bank, and everything. And then when you leave employment there, you want to make sure your signature, your name is off of that account. But that way, you as Betty Jane signing these checks is not personally responsible for anything, because it's not your account, it's the business account. So if just a few of these formalities you pay attention to them, it will make your life a whole lot easier.